In this video, traders, we're going to look at when to remove your trading profits from your account. Stay tuned. Hey guys, warm welcome to you. Right, so this question came in from a subscriber and it was, Dear Mark, can you do a video on intelligent or practical ways to remove profit from a trading account? I recently grew a day trading account from 1.5k to 35k during the lockdown. Good stuff. But I'm not sure when to take money out and how much to take out. I don't need the money currently, so just sit in my bank account, but I'm scared to lose it all because I've blown up an account in the past. On the other hand, I also want to keep the money in the account so I can trade more size, have the potential to keep growing. Please share some thoughts on this topic because nobody talks about it at all. Great question and a good position to be in. Okay, so when to remove your trading profits from your account? Now, my opinion on this is always on the side of safety. So, what does this mean? You should have in your account the margin needed for all your positions. So if you trade multiple positions, what's the margin needed for the size that you're prepared to trade? If you trade one position, what's the margin needed for the size you trade intraday if you're a day trader? This question came from a day trader. So if you trade, let's say you're spread betting, you're trading £20 a point, how much margin is needed for the instruments you trade? So that's your first figure. Then you're adding in your maximum drawdown. What does this mean? So you've allocated a decent risk capital, or considered, should I say, risk capital to each day. In other words, let's say, for example, you don't want to lose more than $500 a day, £500 a day, whatever that figure may be. In the week, you're not prepared to lose more than $1,500. Again, the numbers are relevant, but this is something that's in your trading plan. So you know what your max drawdown is going to be in a week, and let's say it's $1,500. So you've got $1,500 max drawdown here. And let's say I've used dollars there. Let's say your margin requirement for the stuff you're trading is 10,000 for whatever you're trading, and understand the margin that you need. So you only need, that is a zero by the way, you only need 11,500 plus a little bit of extra firepower if it's part of your plan. And what does this mean? It means that if your plan says, hey, if XYZ happens unusually, I'm okay to take a little bit more size, I'm okay to trade this particular instrument, whatever. Let's say there's another $2,000 there, whatever that may be. Okay, so a little bit of room to breathe. So this is the total here is what you should have in your trading account. So you should have whatever that is, $13,500, right? So $13,500 in your trading account maximum at any one time. And that allows you to trade the instruments that you said you were going to trade, margin, with the size that you said you're going to trade. It allows you to draw down enough for what period, whether it's a week, assume it's a week for a day trader, say 1,500, and then a little bit of extra. So again, if you're vulnerable to kind of over trading, get rid of the extra, just have that. So now you know you've got the minimum required. There's no need to have more money in your trading account. Number one, you're vulnerable to the company going bust, and that's a rarity, but it has happened and it does happen. And that's why you should trade with a regulated firm, guys. If you want to check out our channel sponsor, the link in the description below. That was really slick the way I put that one in there. But yeah, guys, honestly, you need to be careful where your money is. There's no reason to have it in a broker unnecessarily. And the argument that you want to trade more size, I get that, and that's a perfectly valid argument. But my counter to that is this, is that yes, but unless you've planned for it, all you're doing is allowing yourself to trade that size on a whim. So if you've made some money, say, you know what, I'm going to increase my position size a little bit, that should be done in your trading plan. You say, right, I'm going to increase my position size by 50%. It's too much, but imagine you did. All of a sudden the margin requirement goes up to 15,000. All of a sudden your max drawdown adds another 750 onto it. So you adjust the maximum you need in there. So then you just keep that amount in there. So that's a decision you make, a commercial decision you make for your trading business, not during the trading environment, but outside of the trading environment. You go, yeah, I'm going to dial my position size up a little bit. That or whatever other decision, I'm going to risk a little bit more in the week. I'm going to do this. And then you reverse engineer it and go, okay, well now my total I need is $20,000 in my trading account. Obviously if you're day trading, guys, and you're doing pattern day trading, you're going to have to have 25,000 in, but forget that for the moment. You're just imagining just general conditions. And again, just have another zero on it. Maybe your margin's 100,000, maybe your max drawdown's 15. You get the idea. But there's no reason to have any more in your trading account than the absolute minimum that you need, because number one, it encourages you to trade size when you shouldn't do. And the argument is, well, I'm not going to be able to hit stuff when I need to. Guys, you know that most brokers, you can get a card out, you can have 20 grand in there in an instant. You know that that's the case. You know most of the time that you can get money in there if you really need it to, but there's no real need. How many times have you actually had to do that? How many times have you actually gone, I really need to trade extra size with this? And again, the argument should be, if you do have in your plan the opportunity or the option to trade huge size all of a sudden, then by all means have it in there. But if you're vulnerable to blowing up and you're kind of very self-aware enough to go, hey, you know what, I end up trading too much size, I overtrade, then add a little safety net in that goes, hey, well actually, I've only got this much in there. The worst case scenario is I get the worst drawdown, I probably get margin call. It's not going to wipe me out completely because the broker will stop me way before. Worst case scenario, but what you're not doing as well is not giving yourself the firepower to be able to trade 10 times the size. You've got 100 grand in your account, you only need 13. You've got the opportunity then to trade way more size than you should be, and you know that's not in your best interest unless you've taken time to plan it in your trading plan, in which case you put it out there. So the summary is this, guys. If you have all this calculated out, the margin you need, the maximum drawdown, any extra firepower, keep that in your trading account. As you make more money, withdraw it. Take your weekly withdrawals if you need to. I would say weekly is the best. If you leave it monthly for day trading, it's too much. Daily maybe too much, but again, if it gets over a certain level is another way of doing it. So you go, right, well, if that gets up to 18k, for example, every time it's over 18k, I'll pull it back to 13.5. Make those withdrawals, take the money out, put it somewhere else. Yes, it may well be sitting in your bank account, but it's better there than it is giving you the option to the option to use it as firepower against you. You're far better off using the minimum needed and just keep drawing it and drawing it and drawing it. And listen, if you draw down your max drawdown, final thing, guys, if you draw down your max drawdown in the week and you need to top it up and you're happy to take the max drawdown again next week, then you can put money back in again. You know, it's a tool. Capital is a tool in your trading account, so use it as such. Have the minimum you need in there for a certain period of time, top it up, withdraw from it as needed, and just use it as a kind of dynamic fund, if you like, rather than trying to build it up. And that's just my way of looking at it. Some people like to stack it up, but I think this is the best way, especially if you're vulnerable to overtrading, if you're vulnerable to kind of getting yourself caught out in things that don't do you any service for your long-term trading success. All right, guys, take care. See you next one. Bye-bye.